What's up, everybody? Logan here again with another YouTube video coming right at you. And today we're going to focus on hedging again, just like yesterday's video with Chris. Now, today what I want to do is take you guys through, because I got a couple questions in the Discord, but I want to take you guys through like live time hedging or real time hedging. So you can see how the contracts are moving. I might just do one contract right now and try to get filled on it because the market currently is not exactly where I want it to be for this hedge, but one contract isn't going to be the end of the world for me. So just to show you guys from start to finish, but currently I have my main trade going on in this account is this SPX 4490, 4475 put credit spread. Now this is a play that I've had to roll a couple times and why I didn't have collateral. Now, currently the market's hovering right around these strikes, and we have another week to go on this play, if anything, so we can let the market kind of work out and see where the price action takes us. But if you were in the Discord today, you guys could see that I said earlier, hey, if we can break 44.75, I want to add some call credit spreads on. Maybe a fourth of the position size is kind of what I'm looking for right now. And you guys can see we're about 15 points away from that right now. Also, now that we're doing this in real time, my laptop's going to be a little bit slower on fills just because it's trying to record as well as fill these orders and then get the real data coming in too. So let's take a look. But like I said, I have 2015 wide contracts, which comes out to about $30,000 in collateral. So what I'm looking to do here is add about a fourth of that. So I'm just going to do one contract for now, of course, but we can dive into it. So we can first, what I want to do is take you guys over to the charts, just so I can show you guys what I'm seeing here on multiple time frames. Basically, what I'm seeing here is we're breaking over some of this resistance finally, which is really nice to see. We still have it on the hourly chart though, and this is the 30-day hourly on this chart. You guys know I like to use the 90-day a bit more. Then we have the 90-day 195, and it has the mean all the way up at 46.89 currently. And then same with our other time frames, right? So to me, it looks like we have more upward pressure. The RSI on the daily chart's at 41. We generally try to hover as close to 50 as possible, right? That's a good spot to shoot for. So I do think we have more upward momentum in the markets, but we are getting at the top of this time frame on all, not all of them specifically, but the shorter term time frames. So let's start our first hedge in case this does continue to act as resistance and the market gets pulled back down towards 4,300 or so. So the first thing that I do here, like I said, is I check the SPX charts because that's the instrument that we're trading today. Then the very next thing, and this is something that I've learned from Halcyon, of course, over time, right? And earlier last year was, well, if you're gonna do any sort of hedge, you wanna check the VIX and see if the volatility index is also matching up with your thesis as well for taking the trade. So you can see here, it pretty much is for me. It's at the bottom chain, which is bottom chain of this 10-minute chart, which is a good indicator. We could pop back up on the VIX, but we are under all the moving averages on these time frames, and we're coming into support over here on the 1 hour chart for the VIX. But the longer term time frames always are king compared to the shorter term ones when it comes to trading. So you can see we're starting to break through support here. And if we revert back to the mean or even somewhere similar, the market should pick back up pretty soon. And then we'll zoom in on the daily chart specifically and maximize this sell. Over here, you guys can see we just broke through the 10-day today. Now we do have to close below it, which would be below 27.21 on the VIX for us to start breaking down and then coming down to test 24.75 on the VIX, which is our 21-day. And you can see the RSI is at 57. Generally, the VIX kind of hovers around this 50 area as well, if you just kind of look at it. And the VIX is one of the more mean reverting instruments in the market. So I expect us to at least pull back and test this 24.75. And then the VIX maybe could pick back up and we see more of a correction, or we start to head back to the mean, which is going to be my bet here. But let's start the hedging process now that we have a green day. That's one other thing too. I prefer to hedge on green days. And this call credit spread is strictly a hedge to this trade. The put credit spread has been great this whole time. Yeah, we've been in the money a bit on it throughout recent volatility. But one thing you got to remember too is when we're looking to hedge, you want to give yourself as much run room from your strikes as you're comfortable with. So that's what I'm doing here with you guys. It does kind of stink though. You're literally 3 points away from like the perfect spot for me. It's funny how the market always does that. But we can do this anyway just because I want to show you guys how to do this in real time for at least with one contract. So we'll go to the trade tab. We go to SPX from VIX because we're not trading the VIX, right? Trading SPX. Then we go to February 7th. And as you guys can see here, here's the options chain. Now the expected move is 128 points over the next 7 days. So we have to do some math here. Currently, I have about a 40% chance of getting out of this trade as of right now, right? So the probabilities aren't in my favor, but they're not very much against me. It's kind of like a coin flip if you're looking at this from strictly probabilities. But if we do get any sort of VIX retracement, this will start to hover up in the 60% range as the market drifts up about 50 points or so, depending on how far we do retrace on the VIX, if we get that, of course. So now what we can do is first, let's pull up the calculator so we know where to start this trade. Calculator going. So we can see right here, we're getting pretty close to even once your long legs out of the money, you can manipulate this trade, reduce collateral. So we're only about 15 points from that being out of the money too, which would be super helpful, right? So like I said, this is your put credit spread side. If you're someone who hasn't hedged before on TOS, we have this expected move of 128 points. So what we're going to do here is do 128, and then we're going to times this by 150%, which comes out, whoops. No, I did that right, sorry. Times a 1.5% or 150%. That comes out to 192. So this is how far away we're going to want to place our call credit spreads in a perfect world, right? To be 1.5 times outside the expected move. So if we did that right now outside of 192, that would place us all the way up at 4,600 and do this in my head, 50. Yep, 4,650. So if we were to do that, right, 4,650, maybe 4,660 area. Yeah, 4,650. So let's go all the way up to 4,650 and see what that premium is looking like. So we're about a 94% chance out of the money. So let's take this right away. We're going to do this with one contract because I'm going to wait till the market drifts up more to add more. This is going to be my first hedge position. So this doesn't mean that I'm going to only place one contract here. It could be, let's say I don't hedge more until the market starts to drift up and it's at 44.90, right? And then I can bump my strikes up, get the same amount of premium. But this is going to be my first hedged position. Now we are 15 wide on this side. This is another trade I have going. So this is separate from our current trade. But if we were to look at February 7th right here, I'll start my first hedge position. We'll do 46.50 and we'll do 46.65. See what that credit's looking like. So about 75 credit. Let's start working that right now. No additional collateral needs to put up because I'm currently hedging this on the same expiration, because I know here that if I can land this right in this little profit zone between 44.90 and 46.50, which there's a pretty solid probability with what the expected move is, right? That if I'm able to do that, I can take these contracts off, and then I can work on fixing these on a different date if we're not above 4,600, because like a 13% chance of getting out of this guy, definitely not my favorite odds. It could definitely still get tested within a week, right? The expected move, is 127. This is only 140 points away. It could totally get tested and get out of the money, which would be fantastic. But if not, let's start hedging the other position and bringing more capital into this account. So we'll confirm and send this here. As you guys can see, there's no more additional collateral that is needed. The only buying power effect will be that commission cost right here. And then you guys can see here, I have 15K left in the account. I do have separate money in a separate bank account, literally there just for moving money in and out of this account if needed. So no worries here. I do have the money to continue to adjust this because that's one of my strict things. This play takes up about 30% of the account right now between the both of them. So we have another like 60K in cash ready to go that I just sit in the bank account when it's not being utilized in the market. So I can always zip that back over pretty quickly if needed. But I do such longer term swing trades that I would know when I need that money. And it's not like I do, hey, I need that money in 20 seconds or 20 minutes or anything. So that's a really cool other thing you can do, especially hedging, is say like, hey, I'm down to 14,812 trading. This will add another 72. So let's send this off, see if we can get filled. Might be a little tougher to get filled just because the market is dipping a bit since I got into that little spiel, but the VIX is high, so I could see us pop back over. So we're going to start working that position here. Now I'm only getting one because I'm going to take this trade with the rest of the Discord. The link is below if you guys would like to join us and trade with us. But this is just my first hedge position. I'm going to work it here, see if we get filled, and then you can hop over, and on TOS it can show you like, hey, here's where you can fill at. The market would have to go up to about 44.62, 63-ish, and that should fill pretty quickly. Sometimes you do get a bit luckier where maybe it gets to 44.60, fills instantly, but like I said, this VIX is so high, 2, 3, 4 points is pretty much like almost every tick, it seems. So that's something to keep in mind. Everything's looking good as far as the market continuing that upward pressure, but I just want to show you guys how I do my first hedge. And then let's say this does fill, and hopefully it does here so you guys can see it in real time. But the next thing I'm doing now, let's say that was 1/4 of my account. Now I'm looking at this as like, how much risk now do I want to add to the hedge? Because like Chris was saying yesterday, you don't want your insurance to cost more than what you're insuring. So you really got to be careful here. And I don't want to have a one-to-one collateral amount, right? I don't want to have the same amount of collateral on the put side as the call side because the call side is strictly a hedge. I'm just looking at it to bring additional credit into the account. And then if the market does continue to downturn from here, and I don't get out of the money by the 7th or prior to that and adjusting the strikes, I can at least take advantage to any sort of downside movement. So I hope this video helped you guys out quite a bit. I always wanted to make one like this, especially after talking to Chris yesterday and showing you guys how I hedge. But that's kind of my rules. It's not really like a super technical pattern thing. It's mainly expected moves. And then if you think that risk to reward is there, and if the credit amount that you're trying to receive is worth the hedge, right? I mean, it was 75 bucks in credit I got, and I could have done that 20 more times with that same collateral, and that would have been a really nice payday, right? I mean, that's $1,500 in credit I could have received today if I would have opened all of them at that position without even putting up additional collateral. But I think the market's going to have more upward pressure coming through the next few days, and I bet I can add maybe a little bit higher strikes for the same credit or the same ones for just a nicer credit. So I did want to show you guys with one contract. Still waiting on it to get filled, but I'm pretty hopeful, and I think it will get filled here. So definitely leave any sort of questions you have below in the comments. I really do appreciate it. We're on the road to 10,000 subscribers. There's the fill. You guys heard it go through. Boom. So we just sold the 46.50, 46.65 for the 7th, but I only have one because we're going to pick different strikes in the Discord for our next hedge. Maybe only go 10 wide, but it was nice to get filled and a nice little bump up. So if the market is to continue to dump from here, because I know there's a lot of speculation that maybe we run to 4,500 and then we get shut back down at these moving averages, right? Totally could happen, right? So why not put yourself in a better situation, collect a little bit of credit. And now my plan for taking profit is I like to take profit once my hedge is collected about 60%. I'm not going to put that order in just yet because we just filled it. It has 7 days left on it. If it wasn't winter, I could go play. Well, even though I got the tropical background, you could set your hedges and then go play golf all day. Go to the golf course, and then come look back at the market, on Wednesday and say, hey, how are my hedges doing? Is it ready to take off for profit? Start setting some orders, right? So yeah, I'm looking at trying to make at least like 40 bucks, 40 cents on this trade, right? In options trading, but just about $40 on that specific trade. Take it off if the market starts to see more upward pressure and then move on. So it's a nice little way to continue to pad your account with credit. And we do have the market continuing to drift up a little bit here. So really curious to see what we get, but I appreciate all the support on this video. If you guys have yet to leave a like, a comment, and subscribe below, do that now. Also, let me know if you'd like to have Chris back on. I think his video was fantastic. It's performing well. We're getting a lot of great feedback from you guys in the Discord and also in the YouTube comments. So I really do appreciate it. And then let me know what content you want to see from me a little bit more. I have a lot of fun making this videos, and I would love to see what you guys have in mind and what you're struggling with lately or just want to see. That's going to be everything for me in this video, and I can't wait to see you guys in the next one.